What's going on TikTok, Instagram, YouTube, wherever you see me at? Today we're going to talk about a dividend stock and see if I'm going to add it to my dividend portfolio. Right now, I'm not really trying to add anything, but at the end of the day, if I do find one that I can add throughout my research and looking at different stocks, I will add it because at the end of the day, this is an active dividend portfolio, and I am trying to get the best return I can because not all the picks I have will do great. So today we're gonna be talking about OR royalty and what they are and who they are and see what AI says about us and see if it's worth me adding this to my dividend portfolio. So please like and subscribe to my video. It really does help with the algorithm. And at the end of the day, I'm not a financial expert. I'm just some guy on YouTube trying to build a dividend portfolio for my bridge account. And they had to meet certain criteria. They had to be financially healthy. They had to pay dividend. And I have to believe they're going to be there for the long term. And let's get into this video. So, who are OR royalty? So OR royalty, who they are a intermediate precision metal royalty company focused on the American that commence activity. So they've been around since June 2014. OR royalty hold focus over 190 royalty stream of precious metal offtake. So it looks like they're in the metal world and what they do. Okay, so it looks like they're in mining, which is a pretty good one. Let's see what asset they have. Looks like they have a bunch of assets, and it looks like it's a decent company, and they're engaged in business acquiring and manage precision metal and other high quality royalty streams for Canada and worldwide. So they're in precious metal. So it looks like a good company to have, especially since precious metal has been going up. So let's go and see what AI says about OR stock or ticker symbol OR. So they said the key investment matrix. So it looks like it's $36 today. So market cap is 9.49 billion, placing it mid to large cap tier. Okay, valuation of the PE is 26.35. That's good. The navigate between 24.76 to $48. Okay, and they offer a conservative dividend yield of 0.74%. Okay, and what do they do? So they expose you to real estate mortgage spread interest rate. Okay. And yeah, it just looks like a mining financial sector. So it looks like they finance mining. So just in case, let's look at the description MSN. So OR Royalty is a Canadian-based intermediate precious metal royalty company. Okay, the company is engaged in business acquisition of managing royalties, streams, and similar interests in Canada and worldwide. The company portfolio anchors the cornerstone. So a 3 to 5% net smelt return on royalty. So they hold over 195. So it looks like it's a pretty big company. Their sector is basic material. Their industry is metal and mine, and they incorporated in 2014 with 27 employees. So they don't have that many employees, which is good if they're just managing the mines. So let's look at the year to date 2.35. 1 year is 34. 3 years 126 and 5 years 146. So it looks like according to that they have good growth opportunity, especially at the 1 year is 34%. So I would be interested. It does beat that 50% that I try to get on the 1 year. and they do pay dividend of 0.72%. And let's see what AI gives them. AI gives them a 2 out of 6. Earnings is 4 out of 6. Future growth is 4 out of 6. Historical performance is 3 out of 6. And financial health is 6 out of 6. So right there, it looks like it's a good company to own. And let's see how the revenue's been going. The revenue has been going up pretty steadily over the years. So it looks like it's a good company to purchase. Now, let's look at the net profit. Their net profit 2 years ago was a negative 20%. I really don't like that, but they went to the positive 8.5 and now at 74%. So looks like they are having massive net profit this year, and this is probably because the price of gold and silver been going up. Operating expense went down, negative 6.34%. So the biggest thing I see is their gross margin stays very good. So it looks like it might be a perfect time to buy them. Now, here's the thing I see. The long-term debt is zero with the current liability of $32 million. So they look like they use all their extra money to pay off their long-term debt. And they're worth approximately 1.42 billion plus 81 million. So let's say they're worth 1.5 billion minus 32 million. Yeah, they're pretty good on that part. And let's look at the cash flow. All right, so it looks like this might be the perfect time to buy them because they just got it out of the negative and they've been going into the positive cash flow. So right there, it looks like they're recovered and it's a perfect time to buy. Let's see what the analyst says to do. The analyst says to buy. And right here, let's see the earnings per price share. They've been doing it. So they've been beating their earnings per price share pretty well. So at the end of the day, this company looks like it's going to do well in the next few years. So right now, it looks like it is a stock I will add to my dividend portfolio. And let's compare it to other people. Price to sell, it does beat its competitors. And they do expect it to grow for the analytic recommendation. So, and then the earnings compared to peers, it is on the lower side. It is lower compared to peer average, but their revenue looks like it's been growing in the last few quarters. So they look like they're steady. Yeah, it's just steady increasing. Now the forecast did give it a lower. So the net profit growth versus the peer, it looks like it beat everyone out. So this does look like a company I will add to my portfolio. So at the end of the day, it meets all my criteria. In my belief, it's financially stable. It has really good finances right now. It has paid off its long-term debt. It has the cash position to pay off their liabilities. So they're in a good financial situation, in my belief. They pay a dividend, and their dividend they pay is kind of small, but it does pay a monthly dividend of 0.72%, so that's pretty good. And lastly, it looks like the future growth of this company is going to do well. So this is a really risky one, but hey, I'm willing to take the risk. So like, subscribe. I will be adding this to my portfolio. Not much, probably $500, and watch it over time. And if it does start doing well, I'll start purchasing a little bit more. If it drops a little bit, I might purchase a little more just to see how it does for a year and keep my portfolio going. So like, subscribe to my video. That's all I got for you.